Sinisha, it's not really about anything very big which markets really frankly are going to be tested for, or there is something which markets are really looking forward to. Jackson Hole meeting after the Fed commentary pretty much is going to be obvious. Jackson Hole became famous only, if I just put some thoughts here, it only became famous in 2009 when quantitative easing was announced. And after that, that in a sense symposium is critical, it is important, it is symbolic, but hardly any large announcements have actually come in last couple of years. You've heard from Fed already, you have the flavor of Fed minutes of the meeting. We pretty much know that what kind of glide path Fed is going to say, and whatever moves would come, they would not be announced in the Jackson Hole symposium later today. So I think symbolically this is important. Historically it has a relevance, but in terms of an announcement tonight, I think it is just the talking point. It may not really be the impact mover, so to say. So, global Qs today may not be the benchmark. The reason why global Qs may not be the benchmark is why, because I think globally that sizable correction which we really spoke about, and from there a giant recovery actually has come back. So I think globally may not be really, today's trade may not be dependent on global Qs per se. But what really matters to me is that if I look at the lay of the land, we have almost crawled back to a new high, and we are now perhaps consolidating. And if you consolidate here, which is what you've done, let's say in last 5 days, I think that's a very healthy sign. That is a clear indication that markets are sweating it out, bulls are doing some hard work, and that typical base building actually has started. The small cap indices suddenly are outperforming the large cap stocks, which means the participation from the retail folks, the HNI folks, that really seems to be coming back. So as we now move from July to August and August to September, where is going to be the market positioning? I think the market positioning is very clear, which is that sectoral rotation, I think, is very evident. You just need to recognize that. I may sound like a broken record here if I say defense, railways, shipyard companies, money is not moving out, but money has moved out. I think moving out is present tense, moved out is past tense, and I think money has already moved out. Second, FMCG index has hit a new high. We must recognize that the market is showing signs of maybe rotation, or that they want to align with defensives. Autos have suddenly started out underperforming. That is what we really need to recognize. So there is a recovery trade which is there in banks. There is a reversal trade which is there in PSU, and there is a comfort trade which is there in select pharma and FMCG. That's how I look at the markets.
If you like this video, then like, share and subscribe to ET Now.